Hi, this is Stuart Weems, and thanks for listening to the Investopoly podcast. My goal is to give you simple, easy to understand insights, strategies and tips to help you master the game of building wealth. In this episode, I'd like to ask the question, is now the right time to buy an investment grade apartment in Melbourne? Firstly, let me start by saying that we can't time the market. Well, we can try, but the problem is that no one's produced a methodology to consistently predict with accuracy what markets will do in the short term. So without a doubt, I'm a big fan of just running your own race, closing your eyes, don't worry about market sentiment or what other people are saying, and invest when it's right for you to do so. However, putting that aside, sometimes you can see markets in imbalance, and if you're lucky enough to sort of pick it, you can potentially earn significant returns in the shorter term. And I think perhaps the investment grade apartment market in Melbourne might be exactly that. So let me explain. Firstly, when I talk about investment grade apartments, I'm talking about older style properties that probably built before 1970, that are mostly land value, that have a lot of scarcity, that are in prime locations, that have proven to generate strong capital growth over the last 30 years or so. So there's probably less than 5% apartments that would meet that grade or would meet that definition. So I'm not just talking about apartments holus bolus. Okay, so what's happened in the past 5 years? Pretty much nothing. There's been very little growth, whereas there's been significant growth in the housing market in Melbourne. So again, investment grade houses in the same suburbs have done a lot better than older style apartments. Part of that is because of all the new apartment stock that's come onto the market. It peaked in 2015 of around 20,000 apartments were built, and it's predicted to reduce by to one third of that amount in the next couple of years. So it's a significant reduction in new stock. As you can imagine, developers have big marketing budgets. They've got shiny new properties to sell. If you're in the market, either as an owner-occupier or an uneducated buyer, because I've spoken about how off-the-plan properties don't make good investments, then they're probably going to attract your dollars. And that's what's probably been happening, causing the flat market for the last 5 years. It's important to note that in markets there's a strong trend of mean reversion, and that means that investments tend to revert to their mean long-term performance. So that is, if they go through a period of very strong growth, it's typically followed by a period of very flat growth, or vice versa. If it's a flat period, it's followed by a strong period. And what I've done in the show notes in this episode, I've provided a link to a chart of the Sydney property market, and that it did exactly that in Sydney over the last period of time. So between 2004 and 2012, Sydney was pretty flat, 1.4% annualised growth. That's less than inflation. But between 2012 and 2017, the growth rate was 14.2%, so it's certainly made up for lost time. And if you look at the average growth between 04 and 17, so over that whole period, it's closer to the long-term mean. So it says that if markets are down for a period of time, they will bounce back. I guess what we don't know is when will the investment grade apartment market in Melbourne bounce back, and that I can't tell you. But if you invest after a period of, say, 5 years of flat growth, then potentially you're a lot closer to a period of very strong growth, or enjoying a period of very strong growth. And arguably, if you buy well, materially you'll probably buy for prices that people were paying 5 years ago. So, you've saved yourself a little bit of money rather than getting in early. If you did buy an investment grade apartment in the last 5 years, don't stress. It's a long-term investment, and no one can pick these cycles and so forth. And of course, I could be wrong. Of course, the apartment market might be flat for another 5 years, but no one really knows. I guess when I sort of stand back and look at it, I think houses have had such a great run that from an affordability perspective, more people will be pushed down into that apartment market. Also, as those newer style properties start to get a bit of wear and tear, and they start to look quite old after a very short period of time, again, that might cause a bit of a renaissance in that investment grade apartment market. So that's what I wanted to share with you today, just a little tip. Firstly, I wanted to talk about mean reversion and how that occurs in markets, and also just sort of point out as an example that the Melbourne apartment market, investment grade apartment market, might be ripe for the pickings at the moment. Again, who knows? I don't know, and I'm not saying that I do. It's inherently difficult to predict short-term market movements, so I'm certainly not encouraging you to do that. Until next time, bye for now.